Hey everybody, my name is Al Nicoletti. I'm an attorney here in Florida, and welcome to the Al Nicoletti Show, where I bring on real estate super investors, rising rock stars, movers and shakers, and leaders of clubs in the community that educate, entertain, and inspire all things Florida real estate on how you could take your company to the next level. I love talking about Florida real estate, and the guest I have today, there's no better person to talk about Florida real estate. Being in the investing game since 1997, big time seasoned investor, Kim Serrato. She's got an incredible bio that I have it in front of me right now. And I want to make sure everybody knows who Kim is, where she came from. She's going to go on and talk about that and some great topics tonight. But I think it's so important. When I saw her bio and backstage, I was like, wow, I really need to read this. I want people to know who we're dealing with, what we have, and I have special guests. Kim is not just any investor. She is a seasoned investor and has been in this game a while. And she is the chief visionary behind Step Off the Edge in real estate investing. She's been an active real estate investor and has been building wealth through real estate activity since 1997. It's a long time. I mean, 1997, I think I was like 7 years old. She teaches real estate investing through a holistic lens, focusing on sound knowledge of real estate investing strategy, integrity-based business smarts, and personal transformation. She's owned a construction company and landscaping companies and has a wealth of experience in banking, financial transactions, and mortgage brokerage. And in addition to launching her groundbreaking educational program, she owns the IT company that she has. She can talk about that. And she's got this Step Off the Edge real estate investing program that she's going to talk about tonight, big time, that inspires, motivates, and educates people on how to begin or truly step into the real estate investing at the very moment in time based on their current skills, experience, goals, and wealth level. And she's going to talk about how you can do this in months. Huge. I mean, this is who we have. Like, these are not just anybody and everybody. I just started my deal yesterday. This is Kim Serrato. This is somebody that can really help you if you've never done a deal or you've done a couple deals and you're stuck in the mud, and she can really give you that nudge. She's bottom line, she can go get it. And she strongly believes the way to wealth is through real estate and is done with a simple plan, one deal at a time. And on this show, Kim is going to talk about, we're both going to talk about this whole thing. Are you really building wealth through real estate investing? Or are you just trading time for money? It's really important that we talk about this because you don't know what kind of investor you are. So you really have to take a step back and see what you're doing. And are you a real estate investor holding or a real estate investor trader by day? They call it a swing trader. She's going to talk about that. And she's going to talk about the real estate investing spectrum that people sit on. What is that spectrum? Where are people sitting? Where do you belong? We're going to find out. I belong on like zero. I don't do any. And then the best way to build wealth is to hold real estate, an asset over time, and to create cash flow from it, which is the BRRRR method. And she's going to talk about how you can use the BRRRR method to create financial freedom. So loaded introduction because it's so, we need it, Cam. I see you backstage. We need it because people need to know who you are, what you are. So without further ado, welcome Kim Serrato to the Al Nicoletti Show. Thank you so much for being here, Kim.
Hey, thank you. Thank you so much. Wow. That was pretty awesome. Thanks for that introduction.
Well, you're a big guest. So, I want people to know who's coming on. Not that, hey, Kim, give your background. Like, people need to know really upfront, like what you're doing with Step Off the Edge, been investing for so long. And I just want to say before we dive in, it's amazing. This is the first time I've seen you since doing the probate boot camp, which was like 5 hours, which I'm never doing again. But it's so good to see you because you stayed all the way until the end. I was so impressed. You were there at the end. You're like, this is crazy. Kim, for people that don't know who you are, tell everybody who Kim Serrato is. We can dive into the Step Off the Edge program, but your background, how did you get into real estate? What were you doing before real estate? Where is Kim today?
Sure, absolutely. So, my background is in technology. That's what, my career ended up being. And at that point in time, I really had no idea what real estate investing was. And it's interesting because looking back now, my grandparents were real estate investors, but I didn't know that. Growing up, I didn't really know that. And as I was getting my education in technology and having conversations with my grandparents, they ended up sharing with me things and asking me questions. And that was in a time period when a lot of things weren't automated. So I was beginning to help them automate some of the things that they were doing. And that piqued my interest. I was running amortization schedules for them, things of that nature. And so I started asking them questions like, what is this all about? What are you, why are you doing this? And at that time, they were telling me that they were holding properties, that they were selling it to people on terms, things like that. And that's what really piqued my interest. And then in the 90s, I bought one of my first houses to live in and decided to then buy a second property. And I turned that one into a rental property. And that's really what started the whole process for me. And that experience was a very bad experience at the end of the day. But I didn't let that stop me, right? I mean, you can't. I mean, that's part of my message here for everybody. And for the people that come into our training program, you cannot let the bad experiences that you have stop you, because those are learning experiences. And if you let them stop you, you're not going to move forward. You're not going to be successful, and you're not going to, gain what people are gaining out there. So, bottom line is that I didn't even realize I had this path until I started doing that. And then I started building a house on this property that I bought and managed the entire construction process. I acted as my own general contractor, built the house. And then I was like, oh my God, why didn't I just do this? Right? Because I loved it. And of course, what I do in technology, which we have a technology supply chain company that I've been running since 2003, but I've been in the supply chain industry, since 1992. But I do project management. So I could easily, take those skill sets and bring those over to what you do in the real estate market, whether it's construction, whether it's investing in real estate. You have to have some project management background. So it was, I just realized that I had a passion for real estate, and I couldn't get enough of it. At that point, I was like, okay, how do I get into this? How do I do this? And that is about the time that I started a construction company with a qualifying partner. And we ran that company, and we actually bought lots. We're going to do new construction. And at that point, the market died. Right? We all know when that happened, right? And, we didn't end up doing that. We ended up closing the business down at some point. But again, it didn't stop me from continuing to invest in real estate as an investor. So we're, later on, we're going to talk about the spectrum and the spectrum of where you are, where should you be, where can you be? And at that point, I'll talk a little bit about where I am on that spectrum, right?
So you said your first deal, though, Kim, you said your first deal was not the best experience, right? No. So it kind of benefits you that it wasn't, because there are other investors that are just starting that go through that experience that you can help lift, which I'm sure is part of that program, is to say, look, I've been there before. I'm here to help you. You have that story. Share with us if you can, or want, if it's that good of a story, what happened? Like, what was that first deal that you can help inspire others that have those struggles, that you can get through it?
Absolutely. Yeah. So I turned that property into a rental property, and the individual ended up not taking care of the property, stopped paying me. So again, this is my first rental property, and I actually had to evict. And, so I had to learn, okay, well, how do I go through an eviction process? That process led to him not moving out. And so we had to take a sheriff there. I had to bring somebody who could help me move their stuff out. And then that individual, well, I'll just say, I think that individual went back in afterwards, after they had been, put out of the property, and proceeded to damage the property. So not only did I have, a property, an eviction, right, a house to clean up, a mess, so I had to recover from all that. And that was a great learning experience. I mean, at the time, it didn't feel like it, right? Because you're having to, figure out how to navigate those kinds of things. And so for me, I learned from that. I took that learning, and that's what I try to share with people in our training program, is that, get set up, you know, do the things up front to know that you have access, know that these things can happen, and have the systems and the tools and the resources available so that when it does happen, right, it's not a surprise. You're not jumping through hoops to try to figure out, who do I call, where do I go, how do I deal with this, right? So you want to make sure that you're planning for the worst and hoping for the best, right? But and to be honest with you, I mean, that was in 1998, right? Because the house became a rental in 97, so that was in 1998. And I have not had another eviction since that time. And we've owned many rental properties, you know, throughout the years, other than one that we had in Pennsylvania. And that was just recently and during COVID. And, you know, that was a whole nother, you know, experience. But, you know, that's really it. But, you know, we know how to navigate it, right? And that one, unfortunately, we had to navigate, you know, remotely, which is a whole nother problem, different state, different legal requirements, you know, with COVID in the middle of it. So, but yeah, I mean, you know, you just can't let that kind of stuff get you down, because if you do, you're just going to jump out of it. And I think that's what happens with a lot of people, right? They jump in, they hit a barrier, they hit a roadblock, and they stop. And then they don't pick it up. Maybe they try it again a few years later. But if you lose momentum when you're starting out, it's really going to hurt your ability to be successful. And that's why we've created the program that we have, because we believe that you have to get started. You have to get into it in that momentum period. And if you can be successful and you can do your first deal, man, things just start to happen, right? Deal one, then deal two, and then things just start to happen.
So hindsight is 2020. If you look back, what you know now, what would be like the three things you tell your trainees and your mentees? Like, what are those things that you say from the get-go? I've heard your story. I understand the failure. Here's what you do. You got to connect with this one. This is where you got to go. What do? They start reading one book. I mean, of course, they're going to go to Step Off the Edge. You know, they're going to subscribe to that. But like, what would you say to them from the beginning? Like, what is that?
Yeah. So I think in the very beginning, you really have to, you know, whatever kind of investing you decide to step into, right? Because there's all kinds, which we're going to talk a little bit about that, but you have to have your team together. You know, that's one of the very first things. You really need to have your funding, and then you need to have your systems. And when you put all those things, your tools and systems, when you put all those things together, no matter what kind of situation, right? Because you're running this like a business, whether you're doing it part-time or whether you're doing it full-time, you have to run it like a business. So now, you know, my good process is this, my bad process is this. This is what I'm going to do, right? You know, like if I come across a probate deal, right? Who am I calling, right? Al. And, you know, because you're the king of it, right? So I'm not going to try to navigate it. I'm going to call Al. So that's what you have to do. You have to make sure that you put those kinds of things. So if I got a plan for the worst, know who I'm going to call. And that's what you want to do when you're stepping into this.
Well, number one, thank you for the plug. I love how it like switches. It could be Prince of Probate. It could be King of Probate. But I understand. I mean, every investor goes through a different story, right? So you don't know what is going to fit for that person's situation, and you just have to evaluate it from there. But at least with you, if they have somebody that's been in the game for a while, they have somebody that's seen a lot of this and can know which direction to go, the good connections, the lenders that are going to call you back or give you good interest rates, all of that stuff. So going into real estate investing and building wealth, I know you wanted to talk about, are you building wealth through real estate investing or just trading time for money, almost like a day trader kind of situation, or you just holding it? So talk to us about, like, what does that mean? Like, what are the different types of real estate investing? Because to me, real estate investing could be buying the tax deed and flipping it and wholesaling it out, or doing wholesaling, right? That could be a whole other conversation. Is wholesaling real estate investing? I've heard that conversation before. But then you have the buy and holds with rentals, Airbnbs, different types. So tell us, what are those different types?
Yeah. So first of all, let me talk a little bit about, you know, what I call like the different areas are like whether you're a day trader or a swing trader or what I'm calling a hodler, right? So, and it's really interesting because I'm pulling this in from some things that I'm learning about stock and cryptocurrencies, right? Because I've been taking a divergent path a little bit to reinvest some of our assets into a different asset class because of what's happening in the real estate market. Okay. And so we'll talk about that maybe a little later, but at the end of the day, you know, whenever you step into real estate investing or any kind of asset investing, you have to really decide where you're going to sit. Are you going to be somebody who is going to step into an asset and hold it for a long period of time? Right? So what does that look like? If you're going to step in and hold it for a long period of time, you're going to buy rental properties, right? So it could be residential, it could be commercial, it could be multifamily, single family, right? It could be land that you're going to hold for a long period of time because you're banking on development coming, you know, that way. And that's valid too, right? So that's what really holding an asset is. And that's a slow growth, right? You're going to go through ups and downs over a cycle. So if you hold it for 20 years, you may see some appreciation, you may see some depreciation, right? But overall, and you can look back at market charts and statistics, overall, you're going to see in real estate appreciation, right? You're going to see an overall climb of wealth. So that's what really holding is. Now, so let's talk about day trading, right? Day trading, everybody's familiar with that, right? Everybody's, you know, you can see that all over. That's, you know, you're going into something right now, and by the end of the day, you're going to get rid of it, right? So I kind of liken that to being a wholesaler. Now, that doesn't typically happen in a day, but the whole goal is you never even own it, right? I mean, so in theory, it is kind of like day trading, right? Because I find there's a whole lot of work that goes into it. There's a lot of volatility in it. And I've got to do all this work. I've got to find the property. I got to find the buyer. I got to make all that happen. I got to deal with anything and everything that's around that closing. And I got to bring everybody together. And then in a day, I got to make it close. Right. And so I kind of liken that to day trading. You know, there's a whole lot more work, a whole lot more effort. And you're really never even, in theory, holding the asset. Okay. Like you're just doing it to make money. So then swing trading is more medium style. And I liken swing trading to buying the asset, knowing that you're going to sell it in a short period of time. So you're going to enhance it in some way. Maybe you're going to buy a lot. You're going to do new construction. That's what I call swing trading. So I'm going to be in and out of it in a period of time with the intent of making, you know, cash at the end of it. So of those three things, if we just keep it pretty simple, there's only one of those that really, in my mind, is going to grow wealth for you. And that's being a hodler, right? That's keeping long-term investments, because you want to create wealth through having something that's an asset that's appreciating over time and throwing off some cash flow that you can live on. So when you do these other things, you are making money, right? But if I'm always having to chase after the next thing to make money, then that's what I do in a job, really. Now, if you're smart, right, and you think through it and you plan, what you're going to do is you're going to use those other methods to take that cash, maybe live on it a little bit, and maybe now invest it in long-term investments. You know, so that's where, as you're stepping in to real estate investing, it's so important to be connected with somebody who can help you, you know, think about that plan, think about what makes sense for you. And because the whole idea in investing is to, at some point, set yourself free, to know that you have enough that you could retire from a job that you're working in, or you could, you know, decide that you're going to do just this from a full-time perspective, and it will actually pay for itself. So that's, you know, that's where I see this, you know, the different types. And of course, along all of that, I mean, there's so much you can do, right? Because it can be residential based, it can be commercial based, you know, it can be lending based. You know, there's just so many facets of real estate investing. It could be, you know, you could be sharing in a pool of real estate, right? Mm-hmm. I mean, you know, we don't do that. I don't know much about that, but but that's certainly out there, right? So that's where I think, coming into it, you really have to step back and think about that strategy. Do you want to be in it as a holder? Do you want to be in it as just somebody who's making some really quick cash?
So, two questions. Which one do you see being the most sustainable that
Hmm.
somebody can keep consistently and keep it going? And I guess the other question is, for you, give us some examples of what you would see as a wholesale deal, as a buy and hold, as a Burr method property. What is in the mind of Kim Serrato when you're looking at that real estate going, that's a wholesale deal? That's a buy and
Okay.
hold. I like that. Is it the area that you're looking for? Is it how much repairs that you would have to do that you're like, we'll let somebody else do it? Or that you and Christy are going to go in and go, no, we're doing this. We're going to make this a rehab. We're going to take pictures. What are you looking for?
So my first thing that I look for is really a numbers game. So I want to run the numbers, and I want the numbers to tell me whether it would be a good hold property. If that property is inside the spectrum of our criteria for where we want to hold properties and it's the right characteristics, then if we're ready to buy hold properties, that's what I'm going to do with it, right? Because there's all kinds of factors as you're in this. I mean, sometimes our money's not available, right? That's always going to be somebody's problem because you have it tied up in some projects, right? So it may not be the best time to hold. So then you've got to look at that deal and say, well, can I buy it and actually renovate it and sell it and make the kind of profit I want? So that's deal analysis. It's running the numbers, right? And that's part of what we teach in our course. And so you just have to run the numbers to see what makes sense. It might look like a good rental property, but at the end of the day, you might not be able to cash flow it. And if you can't cash flow it, then it doesn't make sense. And I would stand to say that a lot of what's happening in today's market, because we do evaluate properties, all the time, you're not able to find properties at the price that would make sense to really cash flow them today, unless you can go direct, right, to the actual seller and maybe get it discounted enough that it does make sense. Okay. And that it's distressed enough that it makes sense, right? Because people who have a good asset that's in good shape, guess what they're trying to get today? The highest dollar they can get. So first and foremost, it's numbers. Run the numbers, have some kind of tool or something that you can run those numbers with. And then also understand the characteristics of what makes something a good buy for you to hold, right? What makes something a good buy for you to renovate. And as far as wholesaling, first of all, you got to decide if you want to be in that game, right? And because if you do, right, then you can make money. You just have to be able to put it out to your market, to your database, and actually get somebody who will secure that house and buy the contract from you. Because that really is what wholesaling is somebody buying a contract that is assignable for the most part. So if all else fails, right, you can always potentially turn a deal into a wholesale deal and still make a little bit of money on it. And this is just scratching the surface because we haven't even talked about the possibility of, doing creative financing in order to make deals work, right? And so you do have that aspect as well to factor into all this.
And I think you're talking about the Burr method. Is that right?
Well, not really, not yet. Creative financing is really working with a seller to have them sell you their property on terms in some form or fashion, maybe buying that subject to, so you take over the existing mortgage, or you do a wrap around that, or they own it outright and you do a note and a mortgage with them, right? And you're paying them like they're the bank. So, if you can work to get some of those kinds of deals, you can hold those, you can wholesale those, you can renovate those. I mean, we've done this in the past where we've actually found a property. We looked at the analysis. We thought we wanted to hold it. And as we were looking at it, the seller was going to give us terms to do the renovation while we were going to renovate it before we leased it. But when we really looked at the numbers, it wasn't going to cash flow enough. So we opted to actually sell it and renovate it and flip it. And that worked out and it was very well. But that seller turned into someone who agreed to hold a note for us. And then moving forward from that has agreed to work with us on a continued basis, which is just, wonderful, right? Because that helps us out greatly.
On a very simple, basic level, can you explain that the sub two, the creative finance, those methods, and like,
Mhm.
um, I've heard many people talk about how they are great, but so many people will listen to this and think sub two. Like, I don't know,
What is it?
what does that mean in the world of what you're doing?
Yep, sure. So taking a property subject to, or even putting a wrap mortgage around an existing mortgage is really, working with the seller, letting them understand that you can change title, but have contractually an agreement and things that get recorded such that you become responsible for the underlying note, right? And so that therefore is called, taking that subject to. So you then become responsible. The title does change hands. You become responsible for the payments, and you ideally are getting those payments, and those payments are low enough that you can then, if you're going to hold the property, still cash flow when you put your tenant in it, right? What's good is, if a seller is in a situation where maybe they can't sell, they have some kind of issue or concern, but they don't need to worry about maybe going and refinancing something right away. They could potentially do that. They could do it maybe for a year or two, maybe, and then after that you have agreed that you will cash them out, meaning you will refinance it and you will pay it off, right? Or it could stay in place for the rest of the term of the loan, which is going to be something less than 30 years, ideally, right? So taking that over subject to, there are some things that people have to consider because there are due on sale clauses in mortgages, right? So you have to make sure that it's done the right way. And then you also have to know that there's a risk factor there that a lender could call it due. The probability is potentially slim, but they could. And then that would mean that you'd have to pay it off, right? I mean, so you have to be prepared for that. But it's a great way to build wealth because you don't have to use banks, right? So if I can take that mortgage and basically, it's almost like taking it over with an assumption, but it's not really, because you can't assume mortgages anymore, right? So that and wrapping it is really where you're putting another mortgage on top of the mortgage, right? And so that's another methodology that you can use to do it. Now, if it's free and clear, you can ask for owner financing. And a lot of people don't want to do that. Probably because they're not comfortable with it. They don't understand the process. They don't think that sellers would. But if you begin to understand why it's beneficial to a seller to do owner financing, and you can explain some of that to them, they might see that that's beneficial for them, because when they sell, they may not have to pay capital gains tax, depending on whether it's investment property or their primary residence, because they might, fall into the tax category where they can defer, but maybe they do have to. And if they did have to, if they were to do owner financing, then they don't have to pay all that up front. They get to pay only on what they're earning, throughout the life of that loan. And so they're, if they're maybe a little younger and they're in a higher tax bracket, maybe they want to wait, and then maybe in 10 years they have a balloon and they take their cash payment out and they're paying less taxes because they're in a different tax bracket. So there's, owner financing is a great way. And again, all of those kinds of things are great ways to own real estate, because you don't have to go to a bank. You may not have to put a lot of cash of your own into it, because they are acting like the bank for you. And you could use that whether you want to hold the property, whether you want to renovate and sell it. You can use those tactics and put those kinds of deals together to help you pretty much with any kind of real estate deal you're trying to structure.
There's so much to real estate investing that, I mean, it can go so many ways. And I've heard about creative financing. I don't know if you know April Giuliano. She loves creative financing. She
Mm,
loves the novations and the different ways you can structure the agreements with doing sub twos and
mhm,
subject to the mortgage, and there's so many things. And do you teach a lot of these methods in the course as well?
mhm, yep.
Okay, so for everybody out there, step off the edge. Kim Serrato's course, she teaches all of this stuff. She puts you through training so you understand the different levels of creative financing and doing subject twos and owner financing, which I take it from how it sounded from you. You actually go in depth about how to explain it even to sellers in
Mhm,
training, right? Because it's a lot of it's not just the education to your mentees, but getting your mentees to understand it to a level that they can educate the seller so that they can
absolutely.
make that educated guess to do the whole transaction. And I bet you have to work with really good title companies. You have to make sure
Mm,
everybody is all around in the transaction. So another thing I know you wanted to talk about, Kim, was the best way to build wealth is to hold real estate in an asset over time and create cash flow from it. You've talked about that, but
mhm,
using the Burr method to create financial freedom.
mhm.
I'm going to butcher it. Let do it with me. Is it buy, refinance? No, go for it.
No, no, you go for it.
You buy, you rehab, you refinance, you rent.
So you buy, rehab, then you rent. Now I have somebody in it. Now I refinance, and then I repeat it.
Repeat it.
Right?
You go
Yep.
right.
Then I repeat it. So the beauty of the Burr method is that ideally you're starting with some cash, and then you are using that cash in that first deal. And then when it's said and done, you're getting ideally all that cash back, or at least some portion of it. Okay. So that you can then go do it again. So in a perfect world, using this method allows you to take, let's say you've got 20 or 30,000, to take that money, invest it in the process. Then when it's done and you refinance it and you haven't over leveraged it, you have cash flow at the end of the day, then you get that cash back. And now you can go do it again. Right. And so I can take one set of dollars and ideally do that and get it all back. So that's the ideal methodology. So, again, can you do that in some markets? Yes, you can. Is it getting harder and harder? Yes, right? Because you have to buy low enough. I mean, you have to buy low enough. You have to have the right kind of rehab for those numbers to really work out. And mostly what we're doing, we do this. This is how we do most of our, purchases, because we buy distressed mostly, is that we find that we leave some money left into it. So, it's still the Burr method. We still buy, we use a little bit of our money. We go get money from someone else for the rest of the purchase. We renovate it. We then put our lease together. We put our tenant in it, and then we go refi it. And we might get, some of our money, we might have to leave 10, maybe 15,000 of our money in it. And that's okay. Right. Because at the end of the day, if I've got 10 or 15,000 in a property, and I'm making $300 in cash flow a month, I'm doing really well, right? So, and I don't over leverage it, right? So you want to make sure that if you are doing this, you're not refinancing everything to the highest amount you can, because if the market declines, you don't want to have yourself be in a negative equity position, which is what happened, right? When the market crashed, a lot of people found themselves in that kind of position, and they couldn't handle it. So they had to sell off assets and take losses, So some investors were tremendously hurt, not just, people who buy homes just as their home or their residence, but investors were hurt during that because they were over leveraging. So what we do with the Burr methodology is, and with our investing strategy, because we run multiple businesses, right? We're parallel entrepreneurs. We have a successful consulting business. So real estate investing isn't a full-time gig for us, right? We are doing this as a wealth building strategy. We have a business, we run it like a business. And so we have to take our cash out of one of our businesses, right?
Mhm.
We got to get our cash that we can invest from somewhere. So I do that through our real estate investing business by actually doing renovations or new construction and taking the cash we make from that, building that cash up so that we can then now invest that into these BRRRR properties that we're buying. Okay.
Very interesting.
Yeah. So you have to think about these kinds of strategies when you're getting when you're getting ready to step in, because you really have to know how you're going to build that path to financial freedom. For me, the whole reason you want to invest in real estate or any kind of asset like this is because you want to try to create financial freedom, completely different than just investing in a 401k, more traditional ways of investing, right? So, going back to, I think we were talking about it earlier, there's this spectrum of where I think people who want to invest can sit. There's one end of the spectrum that you might actually be somebody who works in a job. You go to a 9-to-5 job every day, but you want to become an investor and you want to invest in real estate, and you can do that. You absolutely can do that. And you could, any of these strategies we talked about, you could step in and, buy a house or two, periodically, and keep it and put a tenant in it and make cash flow and watch that tenant pay your mortgage down, right? Which I call, equity buildup, and also watch it appreciate, right? And so at the end of the day, if you do that, you're doing that part-time while you're continuing to work, and that your job is helping you, take cash and go invest it somewhere. The other end of the spectrum is somebody doing real estate full-time. That's all they do, right? And they might do tons of stuff with it. They might wholesale, and they're making enough money that they can do that full-time. Now, what I will say about people who are running a business like that is, if you're not investing for wealth building, like buying, and holding property, then when you're building that business, you need to be thinking about building it such that you're building a business that can be sold later. Because if you're not building wealth where you have assets that are throwing off cash, then your business better throw off cash at some point. Does that make sense?
It does.
Yeah, because and I don't think a lot of people think about that. A lot of people think the only way they can step into real estate investing is to become a wholesaler. I hear that a lot, because they don't have a lot of cash. They think that that's the natural first step progression. And one of the things that we've built, we have this tool. It's a real estate self-assessment that people can take, and it's actually online. We actually have it online where people can take it. And if anybody's interested in that, they can always, hit me up. But it actually goes through a series of questions. It asks you about your interest, your skills, your knowledge, your experience, what kind of liquidity you have. And based on that, it comes up with a recommendation on what kind of strategy would work best for you, because every strategy has its pluses and minuses, its pros and cons. Some take much more time than others. Like being a wholesaler, there's a lot of effort that goes into being a wholesaler, right?
A lot of the front end, right? Finding people, trying to get under contract, explaining,
marketing, right? Marketing, calling leads, talking to them, there's a lot of effort there, right? And then when you get it under contract, you got to move swiftly to then put it out to your network, right? Now you're doing the outbound marketing. You got to find that person, and then you've got to manage the closing. And that in itself can be cumbersome because you're the middle person. You have to make sure that that's going to go to the table, and how many problems can happen I mean, they can just pop out of nowhere. I mean, we've had situations where there were permit issues, right? Obviously title issues, and
Right.
they all have to be solved before that thing can go to the table. So like being a wholesaler, man, I mean, it can be difficult, right? Not that you don't have to deal with that kind of stuff in these other strategies too, but as somebody who We don't wholesale a lot. It's sort of a back end strategy for us. But for somebody who, we look to buy to renovate or buy to hold, it's so much easier to deal with the upfront, right? Like we're not mailing out to 10,000 people, because we're not trying to buy, 1,000 properties every year. So it's much easier for us. Plus, we like to work with wholesalers.
Right. You can play both sides because one side, you can go to the other side and you can be the buyer, or you could do the flip, right? You could just be the buyer for the flip, and then you get the listing agent even after that to list the property, make it look good. I've seen your properties, Kim. I saw one of them in Murray Hill. It was a small house.
Oh, yeah.
Yeah, I saw that one. You and Christy did the flip.
That was a fun one.
Yeah, it looked fun. It was small at Murray Hill, so you could do that as well. I mean, if we're talking about flipping and fixing on its own, that's probably a whole other thing. That's a whole other, like, you got to buy the materials, you have to have the work, you have to budget out how long is it taking, a whole bunch of that stuff that I don't even know about. I know Gary Booth knows all about flipping and fixing. He's the master at that, but you have to think about all that.
Yeah, or you need to find somebody who's a great contractor that you can trust, you can have a really good, strong relationship with, and just go and hand it to them and go, here, tell me when it's done. Right. So, but it's, but that spectrum we were talking about, right? So there's this one end of the spectrum. If you want to step into real estate, you can do it and have a full-time job. You can do it and run multiple businesses and invest, right? Because it's wealth building. Or you can be on the total end of the spectrum where it's a full-time endeavor for you and that's it. But, should you do that when you're just starting out? If you have a 9-to-5, should you quit your job and then go full force into real estate investing? My recommendation is no, right? Get your feet wet, learn, start doing it. Have some goals. When you get to certain goals, if you really want to step into it as a full-time business, then do it. But if you're going to create a business out of it, either know that business is going to be there to sustain your continued growth and investing, or that your plan is always to sell it at the end of the day, right? Because you're building an asset that you can sell.
Got it. So everybody can learn from Kim. Kim, talk about the Step Off the Edge program. Like, what is that? Because when people are going to watch you, they're going to see you have the knowledge, you have the wherewithal to figure out these deals, to get you past the finish line, whatever it is, wholesaling, creative financing. What is Step Off the Edge, and how can people get involved?
Yeah. So, for the past 3, 4, actually probably 5 years, I have been, kind of in the background talking to the people that are in our network about how can we get people into the investing game, or people who are there, how can we ramp them up? What's missing? What's missing out there when people are starting to learn? And the things that came to me were that people need to be able to step in, have all the tools that they need, the systems that they need, and they need to get some things out of the way, like funding. So where does the money come from? If I don't have all of the money up front, and I don't want to use, or maybe I do, but I don't want to use it all, where do I get funding from, and how do I get that set up? So that, and leads, right? So if you can learn what you need and you have your funding dealt with, what to do there, you have your systems and your tools, right? I come from a systems background, so of course I'm going to think that's important, right? And I do think it's important. And then you have leads, and you're being instructed on step by step. What do I do week 1? What do I do week 2? What do I do week 3? And you're being given leads to call, where you don't have to worry about how do you go get them? How do you find the leads, right? While you're learning about that stuff, because we want to teach you to be able to fish, right, yourself, but you're not going to be able to fish day one. So we're going to give you what you need to be able to step in and eat day one. And ideally, after 4 months, you've secured your first deal. If you've been in action, if you've been active, if you've followed, the training material, and if you're doing that and you're really assertive, you're gonna find a deal that's gonna work for you. And we've had people who have done that. So that's the key, I think, because if you don't do it in the first 6 months or so, you're gonna get tired. you're going to get discouraged and you're going to step away from it. And you may come back to it, you may not, right? And so our whole goal is we give people systems. They're all free to start. Okay, there's systems out there that are free. We teach you how to use them. We get you set up in them. We give you 200 leads every month for 4 months to work. These are leads that you can work. You can call, you can outbound call, you can direct mail, right? As we're teaching you how to find other leads. Okay, so that's 800 leads that you can work in a matter of 4 months. And we've also had the conversation with you in the very beginning about your capital, your cash. Where's it coming from? If you need funding, how do you go find that? And it's not that hard, really. I mean, are there some barriers if you're new? Sure, but it's not that hard. So I feel like if you take those things out of the way in the very beginning, and you have the right, people holding your hand, and we do a weekly Q&A, right, session where people can come ask questions. I mean, one of the things that we even offer is we do a virtual inspection with people, so at some point in the program, you go out and you take me out on a virtual inspection, so I'm literally walking the property with you. It doesn't matter where you're at. I'm walking it with you, talking to you about the inspection process, teaching you live exactly what to do and what to look for. So that is what we think is so powerful. So I mean, I just think that, this is part of what's been missing, because people, I've had people come to me and say, I like this property. I think there's a deal to be made, but I'm afraid to make an offer. And I'm like, why? Because I don't have my money lined up. I don't know where I'm going to get my cash. I'm like, so you're not going to make an offer because you don't have your money lined up? I mean, do you know how many opportunities you're going to miss because of that? And it's a numbers game. It takes making offers to get a deal. You're going to make 100 offers and maybe only get a couple of deals out of those 100 offers.
You're really providing them the support system to get there.
Absolutely. Yep.
So that's huge, right?
Yeah.
So all of those,
they have to be in action.
Of course, you need to take action. You need to try to get the deal. If you're just doing nothing and hoping everything comes to you, it's not going to happen.
Right.
But for the ones that are taking the action, you have the support system to help. Here, we have somebody for lending. Here, we have somebody that does the title, especially with the creative financing, if that's something interesting to you. You line up all of that and you say, look, we'll give you all the tools. If you're an action taker, this is for you. Just keep going. Don't stop, right?
Right.
Keep going and it'll happen.
Yeah, make an offer and get it accepted and then come screaming to me and go, oh my gosh, what do I do now, right? And we also have what we call as ambassadors that are available, that are seasoned and experienced investors as well, that maybe they're really good at negotiating, so they're there to, teach, because we continue to teach live, during, the weekly sessions. So, and they can do sessions with the ambassadors, right? These ambassadors have, been gracious to open up themselves to help the students. It's really amazing, actually.
Very interesting. Well, like I said, step off the edge for those that are interested. Either you're new or you're seasoned and you're struggling. Kim's program can really help with that and give you that nudge to the next level, because she's got the whole support staff and the system to make it work. It's all about systems. I'm learning about that too, Kim. Systems, right? Because you have all the training, you have all the knowledge, but then you have to put it together in a package and make it streamlined for yourself. So it's all about the systems, and you got it down. Kim, I always have these signature questions, hot topic questions at the end. You can treat it like rapid fire, or you can treat it as an answer. One of the big things is right now, I don't know, by the time this really comes out later, who knows, the market could be in a buyer's market, but where it's at right now is a seller's market. Inventory all-time low. What's the hot market right now? Where are you heading? Like, what's your focus with Christy? Where are you going?
Yeah, so, we actually are doing new construction right now. We made a decision actually probably last year to step into it. And I'm finding that that's a better place for us to be, as long as we can find the lots. Because even though the prices of of materials going up, we're still building. We still expect to make a profit because prices of housing is going up, right? So for us, that's a good place to be, because the prices of other houses that we would renovate are skyrocketing. So we're not finding that we can, buy those properties at the right price because I mean, there's such low inventory, period. It doesn't matter. Off market, on market, whatever. It's hard to come by, and especially at the right price. Now, even with hold properties, prices are too high even for hold properties. So we're very picky. We're not actually buying a lot of hold properties right now. We're doing some private lending, right? Because we don't want to let our assets just sit on the sidelines. So we're doing some private lending. We're continuing our new construction efforts, which is going, rather well, actually, I think. We'll see once, some of them start to hit the market. We are renovating a property that was a rental that's out of state, which is a whole other animal. Not easy. Learning experiences are going to come out of that. We've typically always invested in our local market. And so having to try to do that outside of our local market, and especially with COVID and everything that's been going on, is quite hard. But we're going to figure out how to make it work, and I'll have some experiences and some wisdom to share about that whole process, right? So really, we're focusing on new construction. We will, if we can find some properties to buy, we will. We're still looking. Things come across our desk all the time. We're very interested in short-term rentals right now. We just converted one of our long-term rentals into a short-term rental, and that went really well. We increased our income substantially. So we're evaluating that with our portfolio. And we are looking outside of our market for some other short-term rentals to add to our portfolio.
Very interesting. It's really interesting seeing where you've been now, where you're kind of going with the new construction, what the market is like right now, and where you both feel like you're comfortable in being in the space and still retaining assets, keeping assets, but not taking huge risks where, this market can go either way right now. I was thinking about so many different things when you're talking about that with where the market's headed. We don't, nobody really knows, right? It's still in that inventory, the low inventory, lumber prices all-time high. And what I've seen lately, it's funny that you talk about investing out of state. Something I've noticed is I'll get calls on probates, and the investors that are calling are in California, or they are Washington, or they're in Colorado. And it seems that with what happened with COVID is a lot more investors are doing sight unseen, and doing investing from virtually. And like you said, it's a new experience, but you know what? There's others that are doing for the first time this as well. So I hope that you share your challenges, the benefits, the downsides, the whole thing when you're finally done, because I've seen a lot more people do that lately.
Yeah, we actually, one of the things that we like to do is we share as we go. So we have a, Facebook group that is, it's Real Estate with Kim Serrato. And we'll go in and we'll publish videos, or we may even go live and talk about these kind of scenarios, because it's a great learning experience for people. And it's possible to do those kinds of things, but you have to put the right system in place. That's really what it's all about. And when you just have one property, right? Like, we're just going to do this one property. So like us putting all these systems in place and putting a team in place doesn't make sense. So it's a little bit of a challenge for us. Although we're in it, we're doing it. We're like, well, heck, maybe we should look at investing up there. I mean, if we're going to go through all this trouble, maybe we're building a stepping stone for something. But yeah, I mean, it's an interesting endeavor. The other thing just to mention is we're taking some of our assets out of real estate and putting it into some other places, So you always have to do this. This never stops. You always have to be analyzing this and deciding what you're going to do and how you're going to take your assets and shift them or not, because you have to protect your assets, especially once you start building up these assets. So
very interesting. And I know you also wanted to talk about the 10-year cash flow projection.
Yeah, I did. I did.
I didn't want to forget about that because it was a good example and you were so excited to talk about it. So for everybody listening, go for it, Kim.
Yeah. So is it possible that I can share my screen? Is it possible?
I don't know if we can do that on this version of Restream, but if you could break it down, if somehow you could break it down that we know what this is.
Yeah, let me do that. So what I did, and this is something that, I could easily get into people's hands. I have a training program called Ignite. That's really kind of a learning program too, where it just really teaches people concepts, a lot of what we talked about tonight. And this is part of that. But what I wanted to really express to people with this particular 10-year, cash flow forecast is, if you just wanted to go slow and you wanted to buy, let's say, one property every other year for 10 years, you'd end up with, buying 5 properties. And what I did in this analysis is I said, let's keep it really simple. Let's use some assumptions like annual appreciation is 1%. The properties that you purchased for 100,000. Okay. And, this isn't that unrealistic. I mean, it might be getting harder and harder to do it, but it's just an example, right? So let's say that you had 10,000 that you could invest each year, and using the BRRRR method, this is actually, if you're very creative and you understand how to get funding, right? How to fund a deal, you could potentially just take 10,000 and invest it in a distressed property, fix it up, refinance it, put a tenant in it. And if you did this once every other year, what these projections show is that at the end of the 10th year, okay, so you own 5 properties, you've owned one in year 1, you pick up another one and it's cash flowing in year 3, right? Then year 5, you get my drift. That at the end of year 10, you have created over that period of 10 years, 54,000 in cash flow. Okay. And it assumes $150 of net cash flow. So that's after all expenses. After paying everything, you have $150 that you can use at your will. Okay. The other thing that's happened during this 10-year period is you've had tenants in place that are paying your mortgage down, right? So that's important. You're not paying your mortgage down. Your tenants are. And so your equity buildup over that time period for those 5 properties is $152,000, almost $153,000. You also are appreciating. Remember, I said 1% a year. And we all know that's low right now. Okay. So this is like a very conservative estimate. So at the end of that 10 years, your assets have appreciated by $31,000. So your equity that you have available, right, is 153. Your asset appreciation is 30. And the cash flow that you've pulled out over those 10 years, you may have put it in the bank, you may not have used it, is 54,000. So your total, if you wanted to sell all of those properties, you could potentially pull out $237,948, including your cash flow. And the value of those properties would be $530,000. So if you look at a return on investment of investing $50,000, if you did 10,000 a year, okay, or 10,000 for each property, you would have a return on investment of 376% for that 10 years. And annualized, that's 38%. So that's amazing, right? And if I want people to understand that, because it's so powerful, right? And you're at the point by year 10 with just those 5 properties that you're actually making $16,200 net income a year from those properties. So, is that enough to have you be retired? Maybe not, but it's a good supplemental income. And that's just a conservative view. Very conservative view. So, that's really what we're talking about when we talk about wealth creation.
Right. It is consistent cash flow, though. Mm-hmm. You take that money and do something else with it. Who knows? You can put it in stocks, maybe compound it over 30 years, or you can use it for some other project that you want to work on. Nonetheless, you have something to work with. You have an asset to work with. So
absolutely. Yeah.
It's incredible. Yeah, it is powerful. If you have those kind of percentages and that kind of rate of return, you're doing really well in real estate, and you're doing really well, like wealth-wise, because you're going to make money. And if you do it consistently with a purpose, you're going to get somewhere. So, Kim, thank you for sharing that.
Yeah, you're welcome.
But I mean, a lot of investors don't go through what you've gone through. So it's incredible hearing these stories about where you can go with real estate and how far. So Kim, tell me, what is your favorite marketing strategy? Is it cold call? Is it direct mail? Is it
I hate calling.
what is it? What is that?
So to be honest, I love buying from wholesalers. Okay. But you can't always do that. Right. So my favorite strategy for getting leads is through marketing. Right. So Facebook marketing or search engine optimization. So I want to automate things. I have a technology background. I want to automate things as much as possible. So I want the leads to come to me. And then we make outbound calls, or we have, people who do that for us. And this is something else that I want to tell people. Look, there are going to be things you like and things you don't like about what you have to do in real estate investing. You need to learn how to do it all. You need to know that you can do it all. But if there's something that you don't like, don't fight it. Be smart and think about putting somebody else in that can do a really good job of that thing and let them do it for you. Okay. I personally don't like to make cold calls, right? I'd rather talk to somebody on a warm call. So if I get a lead from a Facebook ad, they've wanted to talk to me. That's a much easier conversation and it works, but you have to spend money. You have to spend money to make that work. So that's our favorite way to do it.
Yeah, you do have to spend a lot of money to do that stuff on Facebook and all the social media sites.
Yes, you do.
Before. Kim, tell me, what is your most important tip to locking up a deal?
So the most important tip to locking up a deal: move quick, do quick due diligence and deal analysis, make a very quick decision based on facts, numbers, and don't get too emotional about it. Make the offer and try to get it signed as quickly as possible. When you have it and it's signed, there's all kinds of things you can do with it. If you don't have it and it's not signed, you have nothing.
Bring the contract to the house, right?
That's right. Bring it to the house.
That's a huge thing. Another big question on my show is, how are you building trust between you and the seller? Now, it may not be you and the direct seller, but also building trust in the community as you as the end buyer with wholesalers. Like, how are you getting to be that number one for them?
Yeah, it's about being relatable. And it's about, just being real with people. If you're establishing a relationship with someone you're going to do business with over and over again, like a wholesaler, like somebody that you're going to close deals with, it's about establishing a good relationship, speaking with them, taking them coffee, drink, going out and really getting to know who they are as a person, not always just about real estate. You have to establish a strong relationship, right? And even offering to do things to help, right? Like, don't always make it about you, right? See what you can do to help other people advance in the things that they need help with. If it's a seller, again, it's about being relatable. It's about having empathy for them, trying to make sure that they understand that you're there to help them, and that no matter what, you're there to help them. And, we've had deals, that have come through that it's taken us 8 or 9 months of conversation, relationship to close. And because we've just been there for them, we've tried to educate them. We've just been very open with them. We have, we're very authentic, and they get to the point where they understand that we have integrity. So they end up coming back to us when things don't work out. If they don't want to work with us day one, we always just leave the door open and say, we're here if you need help, if you have questions, no matter what, you can talk to us. And that in itself has them sometimes coming back to us. So, there's deals that we've lost that they show back up and we end up winning. So
it's just building that trust, building that relationship, building the network, and having that authenticity.
Yeah. And I mean, you have to be in it to help them, right? This isn't, you're there. If you're buying a house from somebody, unless you're paying retail, like it's just, you're buying it and you're paying retail, you're there to help them find the best solution that works for them, that will also work for you. That's really what it's all about.
And making it happen.
Yep. And standing on your word, right?
Right. Of course. Reputation's everything.
Yep.
Right. And so my final question on the signature questions, and this answer, I've gotten so many different ones. I can't wait to see the compilation that JP and Pablo and we all do, is biggest deal killer. People have said the lending, the title company, insurance, so many things that can go wrong in the deal. But in the world of Kim Serrato, what is the number one biggest deal killer you see?
I think, probably title issues, right? That you just can't overcome. I think a lot of them, most everything we can overcome, but there are sometimes you can't. And if people don't want to work with you, to deal with some of the things that have to be dealt with, those are deal breakers. I mean, if there are permit issues and you can't get those solved, I mean, that could be a deal breaker. But I would say definitely title issues, probably.
Yeah, they always come up. It can be the taxes. It could be a second mortgage. It could be judgments and liens. I've even seen how with heirs, they're not even on title yet. And all of a sudden they become on title and all the judgments and liens stick to them. So I totally understand where you're going with title.
Mm-hmm.
Title comes up. I think it's my number one biggest deal killer when it comes to a deal that comes for something with probate is title.
Yeah. It's interesting. Some of the things that we see, there are some people out there that they don't care whether there's nuisance liens and things like that on their properties. Their mindset is, whatever strategy I have, I don't care, if they're there, but then when they try to sell, they have to be addressed. And sometimes that's not easy to do. So, it's the non-permitting and the title issues, I think, are things that can really hurt a deal. So
huge. Well, thank you for that. Really appreciate that.
Absolutely.
And on the live show, what's the benefit of the live show is that I get questions while we're on air, while they're watching you, so we can get them the reaction from Kim right away. And the first question is from D Dockery. D, a huge fan of Al Nicoletti. Thank you, D, for asking the question. And it says, I think the camera's in the way. How did you lose any money in 08, Kim?
Yeah. So interestingly enough, I did not, but only because I held on to a couple of properties that I could have lost money. So my current property, that's my primary residence, is one that I would have lost money on. I decided to move into it so that I wouldn't lose money, and am now in a really good position with it. Thank goodness. Right. I had another property that we decided to hold, which I'm glad we did. It was worth, quite a bit of money at the top of the market, and it declined very deeply. As a matter of fact, it's the one that we just turned into a short-term rental. So if we hadn't held on to that, I would have lost money. And I'm blessed to say that right now, as of today, I have not lost any money on any deals that we've done. Thank goodness.
Wow.
Yeah.
Wow. Look at that. I mean, that's huge from you.
Yeah.
So, I mean, look at that. Everybody's got to go to step off the edge. We're not going to lose any.
Now, it doesn't mean I made a ton of money on them,
Right.
But we've been blessed to not have a loss at this point in time. So,
well, that's huge, Kim. That's saying something for you being in investing for so many years. I mean, there's so many investors that have lost millions, gained millions, and lost it again. And I think seeing you're on a steady path. You stay consistent. You stay smart.
Mm-hmm.
And you stay and you get with the right people around you, and you're not just going after every little thing. You focus on the plan, have a system, and you make it happen.
That's
so
right.
Kim, we're going to make sure we toggle all the contact where they can find you on Facebook, where they can find you on Instagram, and they can make sure they get your training website. That's a huge one. And find more material on Facebook with all of the stuff that you do with Step Off the Edge. And we'll make sure we do that all in the closing. Kim, thank you so much again for being here. Thank you for sharing your knowledge and sharing your experience and sharing what Step Off the Edge with Kim Serrato is, and how people can get more involved with real estate and not be afraid to do it and just dive in, but be smart about it and having that system in place. So, Kim, thank you for taking time out of your night to join me on the Al Nicoletti Show. Well, you're very welcome. And thank you for, asking me if I would do this. I really appreciate that. Thank you. Yeah, I love it. I love it. I love everything that you said. And I hope everybody can take a look at Step Off the Edge with Kim Serrato. She's got a huge program. And Kim, I'm about to wrap it up. So thank you so much again for being on the show. I'll see you soon. I'll see you at one of the events soon. Yeah, absolutely. Yep. Maybe I'll have a probate coming soon. that, or I'll hold Probate Bootcamp 2.0, but it won't be 5 hours, and maybe you'll be there.
All right, cool.
There you go. I'll see you soon, Kim.
Yeah.
All right, everybody. If you want more content like this, make sure you check out the Al Nicoletti Facebook page, the Al Nicoletti business page. I got content on YouTube under Al Nicoletti. I got the Al Nicoletti Show on iTunes and Spotify. It's all over the place. Tons of episodes of past guests that I've had on my show that range from everything in investing real estate to buy and hold to things that Kim Serrato talked about tonight. So many different episodes with probate, and there's tons of content out there. You can check out the Instagram at Attorney Nicoletti. There's all the micros and the quote cards from all the amazing guests that are out there. And I will see you next time on the Al Nicoletti Show. Take care.